Tuesday morning on the floor of the New York Stock Exchange. We are here with our guest. It's Mark Otto, Managing Director at Streicher Company. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, we have been down for the last three sessions. We are pretty flat at the moment. Federal Reserve is still dominating here on the market, even though, of course, we are still looking to Washington, and the debate for the debt ceiling is just very close.
Certainly, I think the Fed's definitely overshadowing everything. Even though their credibility for forward-looking guidance is definitely taken a hit since last week. There are two Fed speakers speaking today. One speaking this morning, another one at noon. That's definitely going to influence the market as far as what they say. President Obama is actually addressing the UN right now, too. I noticed when he started speaking about Syria, the market started to turn a little bit lower. We're down about 50 points right now.
So it's still definitely a factor. The geopolitical fears are still a factor in the market.
Certainly. I think because the market's uncertain what's going on with QE3, it's searching elsewhere for some guidance. And certainly the geopolitical action, what's going on in the world right now, is going to influence the market as well.
Yeah, you were saying some confusion from the Federal Reserve yesterday. Definitely, we see how the Federal Reserve is divided right now, even though a lot of people are pointing to the fact that it could be the same strategy that the Federal Reserve used in the past, like not just confusing the market on purpose, just not to convince them that taper is out of the question or taper is coming.
Absolutely. I think, there's some reports that there were some very frustrated traders last week with the announcement that came out. They were taken, by shock. They were sort of guided to expect one thing, and it didn't happen. So how much credibility and how much all these traders are going to focus on what the Fed speakers say today, we'll have to see how it pans out. But I think one thing that's interesting that's new to the environment over the course of the past couple of years, it seems as though algorithmic trading is really queuing in on any key event, even social media. If you recall, several months back, there was a tweet about finding a bomb in the White House, and boom, there was a sort of a flash drop in the market with a quick correction. So certainly I think that Fed speakers and people like that, even the president speaking today, more than likely they're all queuing in on, and you're going to watch the market move off it.
And Washington, I was just saying, it probably is going to dominate the next few weeks. And how much do you think the market is discounting already a solution in Washington? We know that Washington, always found a solution, at least in the past. At the last minute, is going to happen the same thing. Are you worried about it? The market is worried about it?
I'm not too worried about it. I mean, when you rewind, you look back to the fiscal cliff. We've been down this road before. We survived the sequestration. So what's the worst that can happen? So I think that's the way traders are taking it in. I think most traders that I speak to think that there will be some sort of an agreement made before the end comes.
Now let's talk about the taper again. You think it's going to happen in October? Do you think the market is discounting October, or it might happen just December or the beginning of the new year? So many factors are in playing, of course. We know the new Federal Reserve Chair, so a lot of people are saying maybe Ben Bernanke wants to start a taper before maybe Yellen will take his place.
Yeah, a lot of people are saying that he may want to, he brought this to the table. He'll want to unwind it before passing it on. I have the benefit of being a DMM here on the floor of the NYSE, so I have to have depth liquidity in a two-sided market and all the stocks I represent regardless of what goes on. So the way I program my algorithms is different than somebody who's on a brokerage side that's actually positioning going into it. So I have the luxury of saying whatever happens, happens. If it happens in October, fine. If it happens in December. But I think with the uncertainty going on, that's definitely an advantage that I have over the brokerage side.
Absolutely. Yeah, and this uncertainty probably will cause this market, at least for the month of October, to stay to stay the course, to stay where we are right now. What do you think is going to happen?
Yeah, I think that certainly any more clarity going forward is going to be what traders are looking for. Right now, the market's certainly grasping for anything to actually be a driving force or a catalyst. Earnings is something that's going to come up on the horizon, so that'll continue to be a factor going forward as well. However, what traders want to see is some sort of normalcy, some sort of transparency with what the Fed's going to do, some sort of transparency on what's going to go on with the debt ceiling debate. We could turn our focus into earnings, into the moving factors that should move the market, macroeconomic data. So
The fundamentals.
right, absolutely. Yep.
And talking about the earnings, we already know yesterday Financial Times reported that Citigroup might have had a dip, like a steep drop in revenues that might really affect the earnings. So we saw the financial yesterday going down, and a lot of fears are also related to JP Morgan. We all know about the big amount they had to pay the last few weeks. So do you think that the financial can make and break the earnings season?
Well, it's certainly been a driving force over the last several quarters. They saw a big rebound since 2008, the financial crisis. A lot of these financial institutions and banks have learned to adapt. They've gotten lean and mean. Although analysts' expectations for their forecasts have been low as far as the bar being set for earnings, however, this time we may see some struggling. It appears, and it's already in the early stages of it.
Now, give me some numbers. Give me some level for the S&P 500 for the week.
Well, I have to point out that the last couple of days with the selling that we've seen, it's pretty impressive that the S&P we're hanging right around 1,700. So it's pretty incredible. Obviously, 1,700 is a level both psychological and technical. Up from here for resistance, it's 1,705 and 1,715, then 17 and a quarter. Down from here, you see support at 1695, 1683, and then it drops down to 1665.
Perfect. We'll see. Thank you very much, Mark, for being with us.
Thank you.
And thank you for watching.